Good morning, real life traders. Good morning. Give me a one in the chat if you can hear me okay. Awesome. Cool. All right. So good morning, real life traders. Good morning, everybody out there on YouTube. Appreciate you being here on this Friday, very, very cold Friday up here in the Northeast. Depending on where everybody is located, you might be enjoying the beautiful ocean and warm weather of Hawaii like Johnny Guarco, or you might be freezing your butt off like myself and Chris McCoy, who are up here in the Northeast. Oh, or -19 in Toronto. Awesome. All right. So anyway, Friday. Let me just give me 1 second. Let me just get my screens arranged here. 2 seconds. Windy and rainy. Agnes, windy and rainy. Okay. Yep. Rock, good morning. All right. So let's take a look. Let me just move these screens around real quick. I got to get my chat moved over. I need to get this moved over. And let me get one more chart up. Okay, I think we're in good shape. So, wow, below 40 in Maryland. Okay, all right, yeah, we're supposed to get some we're going skiing this weekend up in Vermont, and it's supposed to be single digits, and then wind chill factor. So I'm not looking forward to that. I am definitely not a cold weather person. I mean, to be honest, like if I'm in the Caribbean, right? Beautiful weather in the Caribbean, or if I was visiting with Johnny Guarco in Hawaii, the only reason I would go in the pool is if there was a pool bar in the middle of the pool. So that is my motivation to get in the water. All right, let's take a look at the broader markets here. Let's take a look. So last time, it's interesting. Last time I was on with you on a Friday, and by the way, this is a beginner Friday. So we do this every couple of weeks, and we slow things down for the beginner traders and new and developing traders, and make sure that we are answering any and all questions that somebody might have who might be feeling a little lost, or maybe a little behind, or not completely understanding different concepts. But this is your time. So we slow things down purposely to be able to address any questions, issues, comments, anything that the newer and developing traders have. So give me I'm curious, just real quick, because we had the open house in January, and we're now into February. Give me a one in the chat if you are brand new to real life trading. So Al's new to real life trading. I know there's more of you out there. See if anybody else responds. Okay. Well, anyway, so Al and whoever else is brand new to real life trading, again, we do take a Friday every couple Fridays, and we slow things down. And Agnes joined early January. Okay, so Agnes, you've probably heard me then, since I was on in January doing a beginner Friday. So again, your time to ask questions, and I encourage you not to feel a little intimidated to ask questions that you think other people might already know the answer to. It's okay. That's why we're here, right? Yeah. So Chuck, we'll be taking trades. Absolutely. We take trades every single day. So the question is, Chuck, is will a trade, present itself? And yes, there are trades that present themselves every moment of the market. So will we be taking trades today? Absolutely. I'm on from now until 10 o'clock when Johnny takes over. So we will see what happens in that from the time the market opens until from 9:30 until when Johnny takes over. And if we see something, we will absolutely take it. So let's take a look at the broader markets. Give me 1 second. Here's the chart of the S&P. Let me maximize this. And what I want to start with, and when we did this, every time that I'm with you in the mornings, this is how I'd like to start. I'd like to look at the broader markets, but most importantly, let's zoom out a little bit, because we definitely have a change even the last couple of weeks. It's go to this view here. Okay, so what's interesting is last time that I was on with you a couple weeks ago on our Beginner Friday, we were down. I was talking about how we had tested this trend line, and this trend line here. And if I go out, zoom out, right, you can see how strong this trend line has been. This entire move downwards on this market, you can see how strong the trend line has been. Tested it here, rejected, tested it here, rejected. And then if we zoom in into here, right, we talked about these days here where the these, you know, double top, right, although this was a new high, but testing this trend line twice here, and how it failed, got rejected. And also we talked about here, we always look for divergence on whether you're using RSI or MACD. And we talked about how there was definitely a bearish divergence here when you looked at this move here versus this move. Here we were making a higher high, but if you look down here, we had a bearish divergence. So the MACD was not putting in, it was actually going down as the market was going up. So there's your bearish divergence that we always look for when, and again, when I'm using RSI, MACD, anything like that, I'm primarily looking for divergence to see if there is an indication that, okay, this move really has strength or it doesn't have strength. And when this happened, we knew that this was likely, and especially look at this candle, this you know, shooting star candle. Look at that. At one point, big bullish candle, and then just got rejected, sold off. So, and again, here was that divergence. But now look at it. And I think, I'm trying to remember who it was when we looked at it last time. We were up in here, and we were talking about how this was kind of cup and handle-ish. And maybe Lucian, hey, Win, good morning. Maybe it was Lucian, I forget, but there was somebody who pointed out and said, hey, that looks a little bit like a cup and handle. And I was talking about, I said, yep, that does look a little cup and handle-ish. And I think we were right up in here. We were just breaking through the trend line. And I said, we would need to pull back a little bit to form the handle, and then you look for it to go. And sure enough, that's exactly what happened. Jesse James, good morning. So that's exactly what happened. And what I really like about what's happening here is how we broke through, you know, all these other times when we tested this trend line, even parts of it that we did break through, we got rejected quickly and came back under. This time here, I mean, this is a great looking candle. Let me zoom in a little bit. This test right here, this retest of that trend line, and clearly the bulls were stepping in and protecting that area. And at one point that would have been a big bearish candle, got bought up, ended up with a nice looking hammer, and here we go. So what are we looking for now? What are we expecting? Well, again, nobody has a crystal ball. I don't know for sure, but I know from experience that what we're likely to see now is a pullback and a retest of this area, and then move back up. So what are we talking about? Well, if you follow real life trading, if you've looked at all the videos, some type of an S curve, right? Where we have now, so there's a couple things at play here, right? You're looking for an S curve. That's something I always look for. I also love trading off of trend lines. And what I know from trading off of trend lines is that when a trend line is broken, that area, because this trend line is serving as support resistance. So previous resistance, which it has been for the, you know, however long, right? We zoomed out, we were looking at in the last year how strong that's been. Well, previous resistance then becomes support. So we're looking at, and that's just technical analysis 101. So what we're looking for is, at least what I'll be looking for here, is a pullback, a retest. Now, it doesn't mean it's got to come all the way back down here, not necessarily, but I would be looking for a pullback, a retest of this area, and then look for it to move back up. If we're looking at the RSI here, or MACD, looking strong, right? So here we came up here. And if you look between, now here, again, when we're looking for some type of divergence, it's still a little bit lower right here when it made this move here, but it was here, it's moving up. right? If you look back here, this move, the MACD was moving down. And if you look at the histogram, it was below the 0 line, right? So move above, but the histogram down below. Now, if you look at where we made this move and we broke through, histogram is above, right? And the MACD lines are moving bullishly. So good look overall. I am expecting some type of a pullback in the next, and again, it's going to happen all today. No, not necessarily. I would not expect that. But over the course of the next week or two, would I expect to see some type of a retracement down here and then a move? Absolutely. So there's the S&P. We're going to get a similar look here on the NASDAQ, right? Again, and if you had just looked at the histogram on the S&P, you can see here the histogram is even much stronger here on the NASDAQ, right? And if you look at the look at where we were, again, this double top area right here, testing of this trend line, definitely a bearish divergence when we were looking at that. And now when we broke through, you know, look at this movement, right, on these on the MACD lines. It's a great look, strong histogram. Again, if I zoom out, you can see how strong this trend line, just like the S&P, right? Look how strong that trend line's been. So I love the fact that we've broken through it. Is this, you know, are we out of the woods yet? Not necessarily, but the fact that we broke that trend line and how strong that trend line was, it's a really good sign. So again, do not panic. Don't be shocked if you see a pullback now and a retest of this area. Looking at some of the individual tickers, I'm noticing some overbought conditions on some of these. So again, would not be shocking. Everything has moved strongly above that trend line. So would not be shocking to see things come back and pull back. We had a little bit of a sell-off this morning. I know I've mentioned it before, but I will put this in the chat right now. If you're not familiar with, and I'll pull this up. Just put it there in the chat, econoday.com. Let me give me a second here. Move this into here. Econoday.com. If you're not familiar with it, this is a very good resource to look at every single morning before you trade. You can go in here, look at the full calendar, and see what is taking place. So Friday, right? So 8:30, employment situation, right? So there's the report when you go, okay, well, why did the market just sell off at 8:30 in the morning? Well, there's your answer, right? So you can come in here. You should be aware of what reports or announcements are going to come out each day, especially Wednesday. That's typically a Fed day when they have their announcements. And the reason you want to be aware of that is the markets can become very volatile very quickly. So if you are in a trade, you want to be aware that any moment the market could become extremely volatile. You want to be able to tighten up your stop, maybe exit the trade if you're into a good profit level. But either way, you want to be aware of these events and be able to trade around them. So if we look at the employment report, right? So anyway, it would give us, this just gives you the results from the results from the report, right? I'm not going to go through it, but just wanted to make sure that everyone knew that this is a great resource. And I know that previously people have thrown out some other resources in the chat. So there's a couple others out there that are similar to this that give you the rundown of what is going to be on the calendar in terms of announcements. Interesting, here I just noticed this talking about divergence, right? So divergence, key thing, and that's something I'm always looking for. And when I see a divergence, does that mean, okay, panic time? You got to, no, it just means be aware that there's things are either slowing down or if there's a bullish divergence that it's looking bullish, right? So you just want to be aware of these things. It doesn't mean that that you exit trades or that you don't trade. It just means you want to be aware. All right. So here was that move at 8:30, right? So when you look at this, you go, well, why the market sell off so much? Well, now you know. So looking here at the, let's go back and let's look at the take a look at what we're expecting for today. Okay. So right now, we broke for the S&P here. We did break the low from yesterday. All right. So we're looking at potential move down. And again, as I just covered, would not be shocking to me to see things pull back. Right. So we've broken below the low from yesterday. So this is today's price action on the S&P. Of course, on the SPY over here, we don't have anything printing yet because the market's not open. But that's why I look at the broader market. I look at the S&P, I look at the NASDAQ, because that's going to give me an indication of how SPY or the Qs are going to open for the day. Here on the Qs, we are looking at inside day, right? And those of you who have been with RLT for any period of time know that inside days often reflect just chop, right? So when you see an inside day, you can expect some choppiness. And what does that mean? Does that mean not to trade? No, not necessarily. That means that you want to know to expect that it can be choppy. So maybe you're going to be faster with your exits or profit taking or taking partials, whatever that might be. You just want to be aware that there could be a lot of whipsaws or chop city when you are in a trade. So right now looks like we're making a slight move down here on the S&P, breaking below yesterday's low. So could be a bearish indication for today on the S&P. We can take a look at the individual tickers that we look at for the, in particular for the 10 EMA strategy. So let me go to a different chart. Okay, so here's AMD. So again, anybody who's new to real life trading, or if you're hearing me for the first time, I know when you look at this, you might go, wow, there's a lot going on there. There's really not. I color code all my moving averages, and I also overlay the higher time frame moving averages on the lower. So what we're looking at here is a daily chart, and this is going to be the same for every chart that we're going to look at here. So what you see here on the daily chart is all these lines, all that represents are just moving averages. I got a couple here I have to adjust. So for instance, this is a 50-day moving average. And I'm just going to move that up into here. And move that. This is the 100, which is the light blue. So dark blue 50, light blue 100. When I get into the heavier lines, I know that those are higher time frame moving averages. So this really thick line right here, which is the same color as this, I know is a 50 because it's the same color, but because of the thickness of the line, I know that's the monthly moving average. All right. So if we go into where we are currently in terms of price action, I have the high and the low already marked off from yesterday. So this is yesterday's candle. Here's the low with that green line. Here's the high. We zoom in a little bit on current price action, and these orange lines that you see here, which carry over into, so this is my intraday chart. This is a 3-minute chart. If you look here, I have the orange line here, which represents the pre-market low right now. Now, again, could this, right here, technically, could that be it? Or down here? Sure. But what I'm looking at is, I like to look at from like maybe 8 o'clock, 8:30 on, where are we? Because that's when things really kind of pick up, right? And if you look over here, here's volume, right? This is showing volume, that's only 100 shares right there, right? Here, that's 100 shares. So there's not that many shares being traded here, but then you jump over in here and there, look, now we're at almost 75,000 shares. So I would look at this to me as being a stronger area of support resistance than looking back over here where there's, just 100 shares, right? So greater number of shares, obviously the more interest there was at that time. So I've got my high and my low marked off. This heavy black line here, again, because I know of my color coding, I know that black is my 20 EMA. And because of the thickness, I know that that is a monthly moving average. So again, monthly is going to be stronger than a weekly. Weekly is going to be stronger than a daily. So, but I have all these marked off, right? So I need to know. Now, in terms of, I mentioned this before, in terms of overbought, oversold, right? So here's RSI. We're looking at RSI now, right? So you can see here, Jesse, my moving averages, those lines are not automatically updated. I have to manually go in and do those each day. So, it takes me, a few minutes per chart just to move the lines. So the moving averages, so here's the fixed moving average, right? And actually here, let me give you a good example. This right here is the weekly, right? And I'm not sure where my line went, should be there. I know that that's the weekly because see how it's kind of choppy. So I'm on a daily chart and I do have an indicator that will plot the higher time frame, the next higher time frame on the lower time frame, right? So this is the weekly. So what I would do at this point, I'm not sure where my line went. It was there. So I'm going to take this, if I go duplicate, right? Now I'm going to drag this up in here. And because it's, again, all color coded, I know it's the same color. So now because it's a weekly, I'm going to adjust this and I'm going to make this line, it's a 2 right now. I know that's a daily thickness. I'm going to change it to a 3, right? And then I use a 4 for the monthly. So now when I'm looking at this, I know that when I scroll out of here, I can look at that. I know right away, okay, there's the weekly 50 simple moving average that I have to be aware of. So if I'm looking at taking a bearish trade, I want to know where that level is, right? So again, that's the weekly. Here's the weekly 100 way up here. So in terms of the RSI, so I'm looking at the daily, right? And you can see here, we're clearly you can see how the RSI here, it has turned red, right? The line here, and we're over top of the 70 level. So now we are into that overbought area, right? So what does that mean? Well, it just means to be aware that it is overbought. And what could happen when things are overbought? They want to come back to the mean. They want to come back down here. So, this 50 area, right, is the mean, and we're way above that right now. So would it be unusual for it to pull back into that? No, that's actually what I'm expecting. Now, does this mean just exit right now? Let's say you're in a swing trade and all of a sudden you're into this overbought area. Do you just go ahead and exit? No, you don't exit. It's just an indicator, right? It's not, you're not trading off of it as much as you are just trying to raise your awareness of where things are. So if I'm seeing this, maybe if I'm in a swing trade on daily, I'm going to tighten up my stop. I'm going to maybe take some profit, take a partial, but things can remain overbought, oversold for an extended period of time. And I've seen it go on for weeks. So it doesn't mean go ahead and just bail and exit. No, you're just going to be aware. And if things start to pull back down here into the 50 range, it's to be expected. So you wouldn't be shocked. This is just a heads up that, hey, it's overbought. It might be pulling back, right? But the good news is, so if you look at right now where we are price action wise, and when you look at the monthly moving averages, we do have, again, we have the 20 here, we have the 50 here. So that's good. You have some in terms of moving averages, you have some strong levels here on the monthly that are now potentially providing support for this. So there's AMD. Let's see, market's opening in 5 minutes, which is fine. We're just going to go through some of these 10 EMA charts. NVIDIA, right? Gap and go in the Qs. Yeah, Nick, let's see, close. So what, Nick, what you got to be careful of is looking, yeah, it looks like the Qs can be a gap down, but is it fully going to clear yesterday's candle? That's the question, right? So when we were looking at the NASDAQ before, right now it is when you're looking at the futures, right now it's an inside day. So we're not clearing yesterday's candle. So yes, will we be gapping down from yesterday's close? Certainly, right? But we're not clearing yesterday's candle. So you have to look at that and go, are people panicking, right? On the actual ticker QQQ. Well, we don't know yet, Nick, right? Because the Qs don't start posting until the market opens, right? So when I look at the NASDAQ, the indication right now is that it's not likely not going to clear yesterday's candle, right? But I'll know that momentarily when the market opens. But if you look at what the S&P is doing, like right now in the futures, right now we're looking at a bearish gap and go, right? Well, you can indicate the pre-market. Is it so? Okay, so because I'm not using, I don't have the trading view on right now, right? So when you look at this, I up until the market open, I'm looking at the futures. So that's how I'm looking at it. So could it clear yesterday's count? Of course, but we'll know momentarily when the market opens. All right, so NVIDIA. Let's go and take a quick look at this. Again, I want to try to get through a couple of these before the market opens. So NVIDIA, again, I've got everything marked off, high and low from yesterday, right? With these green lines, need to make a little adjustment here. So here's the pre-market high, pre-market low. Let's activate this, pull this down, right? Again, so there's our intraday look on the 3-minute chart. If we look here at the daily, we do have some moving averages, but they're kind of far away down here, right? So they're below, this is yesterday's candle. Here's Thursday, here's Wednesday. We're down below Wednesday's price action with moving averages, right? So if we do go bearish here, there's some room to move. Again, RSI, right? Overbought, oversold, we're overbought, right? You can see that clearly. We've been overbought. We got overbought here. And here's a great look at how this potentially works. So when we were overbought right through here when it was making this move here. And then you can see here this pullback, right? So RSI, came back. Here's that pullback. Here's that move higher, right? So move up, right? So this could be a 1, a 2, a 3, 4, 5, right? Potentially. But this is all S curve, right? Move up, S curve up, right? Pull back, S curve up. So again, how much would we pull back? We don't know. We're just gonna have to wait and see. So NVIDIA, we currently, again, NVIDIA right now, we are trading inside yesterday's price action, right? So if you were trading the 10 EMA strategy, you're looking for, ideally, you're looking for a break from the previous day's price action or a gap down below the open from yesterday. So, but right now we're just, it's an inside day. We'll have to wait and see, what happens when the market opens, give things a few minutes to shake out. We have 1 minute before the bell rings. Let's take a look at Tesla. I know everybody loves Tesla. So Tesla, look at that doji from yesterday, right? So doji at a high. What do you expect? So think about all these when you start checking off these boxes, right? So you want to check off as many boxes as you can. You have a doji as it's making a high, right? Indication of Wynn just said a reversal, right? Potential pullback. On top of that, you're in a overbought condition on RSI, right? Here's the market open. Let's see where we, bell just went off. See how things start posting. All right, so here's the open on Tesla, gap down below yesterday's open, right? So would be looking for, here's the here's the low from yesterday. And if you zoom in here a little bit on Tesla, it opened not moving all that fast, interestingly enough, right? Some buying coming in. I'm going to switch a screen. I'll show you what I'm looking at on a different screen here. Right. So here's where I'm watching. So here's NVIDIA. Okay. Here's the low from yesterday. Tesla. Let me zoom in a little bit here. Amazon. Right. So Amazon. Just going to zoom in on all these just so we can get a better look. All right, so markets are getting bought up. A little bit of buying coming in. And again, not strong, but enough, right? So give me a minute. I'm just adjusting a couple of things here. All right. All right, let me go back here real quick because we were talking about this before. So it is interesting, right? So when you go, okay, Q's gap and so Q's gap and go. Nick was asking about this. Let me just make sure. Let me go. My share didn't switch. Hang on one second. Okay. Think about this, right? So this is why I like to watch the, some people are just solely focused on SPY and Qs. Reason, and today is a great example of why I look at both, okay? So again, if you were only looking at the SPY and the Qs, you see this gap down, gap and go, and you're thinking, okay, this is, gap and go, it's going to run bearish, right? And that would be, if you're not looking at anything else, that would be a reasonable analysis. Actually, real quick, I need to stop the live stream on YouTube now that the market's open. Everybody on YouTube, thank you for being with us live. Appreciate it. Head on over to reallifetrading.com. We'd love to have you join the community, trade with us every day. It is a great group of traders. We support each other. We trade together. Lots of love. So have a great weekend. Thank you.